15th. I like to start each one of these videos off with a review of the previous pick. We're going to have a busy session here. Going to watch the market open, do a little bit of market commentary on the open, but the main thrust of today's video is going to be gap and go trading strategies. Is there a gap and go trading strategy? Yesterday we had a huge gap and go. Some of these are legitimate. Most of them are fake. So we're going to take a look at that in just a second. Apple, AAPL. This is the stock that I highlighted. You can see that the stock has been able to move higher. That was the video from Sunday afternoon. There's where the stock is indicated right now at about 188. It's moved about $3.50 higher. Nice breakout through these downward sloping trend lines. I still like Apple. If we get any kind of little market pullback, any little bit of a pullback in the stock, selling an out of the money bullish put spread, keying off of this 182.50 level, I like it. I've highlighted this stock in some of the bullish put spreads that I've shown you last week. Had about 4 or 5 of them. I've been mentioning to you that the market is bullish. It is going higher. Some of you don't want to chase the market. You're afraid that you're going to have a reversal in here. Okay, that doesn't mean that you don't trade. That simply means that you use a more passive trading strategy. And instead of going right at the market and buying calls, which would have been an excellent strategy on this breakout, instead you're selling out of the money bullish put spreads and you're leaning on these major technical support levels. I've got 2 videos on my YouTube channel. Each one is at least an hour long, maybe longer. They're about 6 or 7 years old. I highly suggest that you go and watch those videos if you're not familiar with selling out of the money bullish put spreads. That is a bread and butter swing trading strategy, and it's ideal for swing traders who work full time and can't dedicate a lot of time to the market. It's a low maintenance strategy, and it's going to work well now. It's going to work well for many years. We just had to get through this bearish environment. We had to get through the Fed tightening cycle. I think we've done that. So as far as the overall market, we're going to get into some heavy duty analysis. I do like Apple, and today I'm going to be talking about the gap up in the market that we had yesterday. So gap and go, what does that mean? It means that the market opens on its low of the day and then it continues to surge higher the entire day. This is not a great trading profile from a risk reward standpoint, and I'm going to show you why. That said, there are certain instances when we can predict when a gap and go is going to work, and I'm going to show you how you trade those situations. Why don't we want to trade a gap and go? Well, because most gaps up to a new relative high are faded. That means that they result in gap reversals. We've got a new relative high here and a gap up, and look at that gap reversal. The whole day, what did the market do? Sold off. That's what creates that long red candle. This bearish engulfing candle also marked the top. This was back in August. We've seen lots of heavy selling since then. That was a big clue. This is one of the price patterns that we look for when we're trading on a 5-minute basis or even on a D1 chart. Aha! Gap up to a new relative high. Reversal. Okay. Gap up to a new relative high. Reversal. Gap up to a new relative high. Reversal. This was on November 9th, so we're going to go back and take a look at that 5-minute chart. Let's go back to November 9th and see what happened. So there you've got your gap up to a new relative high. I've been warning everybody, be very careful on these. Our best scenario is a gap reversal. So let's talk a little bit about gap reversals and why we prefer them. The reason is because once this move has been established on the open, it's going to attract sellers. They're going to try and knock that down because that's a big move. They're going to test the bid. And as soon as they can start getting some traction, you start seeing some sell programs. This is a sign of resistance. Well, when you can short up in here, then you've got lots of potential because that gap is going to fill. This is not a particularly large gap, but if it was a bigger gap, then you've got lots of room to fill and lots of room for momentum to continue to be established during the course of the day. So as the day unfolds, you see that, yeah, tried to get back to that high, whap, didn't happen. Tried to get back to that high, whap, didn't happen. So now the sell programs kick in. There are many other better examples on a 5-minute basis, but this chart was convenient for us to take a look at. Just know that when you've got these big gaps up, they have a tendency not to follow through. So here we had a gap up just recently, and they tried to knock the market down. That's the first thing these sell programs are going to try and do. So you do not want to be coming in and buying most gaps up. So don't look for a gap and go. There is no gap and go trading strategy because most of them fail. So you've got these big gains from the opening that need to be digested, and the upside reward potential for you is marginal because you'd have to see buyers really excited to keep driving the market higher because that's already a big overnight move. Well, what's your downside risk? So we know the reward on the upside is relatively limited. What is our risk on the downside? Well, if we start filling in this gap, that's a big move. If we start getting sell programs to kick in, we could take out this low very easily and have a bearish trend day. So that is the risk of coming in and buying a gap up. In this particular instance, you can see that half of this gap was preserved. That's fairly bullish because it shows you that buyers might not have been aggressive enough to gobble this thing up and drive it higher right away. So you didn't have that type of momentum or that type of aggressiveness. But once this gap was challenged and half of it filled, yeah, okay, I don't think we're going to get all the way back down to a gap fill, so I'll buy some here. Ooh, I'll buy a little bit more. I'll buy a little bit more. Once this starts to reverse and we make a new high of the day, all right, this is a legitimate gap up. This is being supported by buyers. We had a beautiful little bullish 1OP cross in here. The rest of the day, the market surges higher. On this particular day, and I mentioned it, this is Friday's price action. There was nothing to really tell us that the market was going to lift off. We had a beautiful gap reversal in here. Why is it beautiful? Because we've had this type of buying momentum. We've had a market that's been up for 3 solid weeks, up 10% in 3 weeks. That is strong momentum. Well, if gap reversals are a much more favorable pattern for us to trade, then what would be the best gap reversal for us? It would come on a gap down when we have a strong market uptrend, because this gap down allows us to evaluate stocks with relative strength. Which stocks did not sell off with the market? Which stocks opened near the prior day's close and are ticking higher when the market sold off? Well, when the market finds support, those are the stocks we want to be long. And so the market has this drop, can't knock it down, can't knock it down, can't knock it down. There's your gap reversal, and you get a beautiful entry price to join the longer term market tailwind. So yes, gap reversal on a gap down in an upward trending market, love it. Show me all of those that you can possibly show me, and that's what results in a long green candle. Open on the low, close on the high. So let's fast forward. Let's take a look at the price action that we had yesterday. Let's refresh our memories and go into the D1 chart. First of all, I've been telling you, I've been telling you back in here. Okay, yes, I was a few days early. I was 3-4 days early, and I'm being criticized for this, for telling everybody right in here, watch for a big market bounce. This is when bullish seasonality kicks in. I know we've been going down for the last 3 months. Be careful. Okay, so we took out the 200-day moving average, and those 3 days we saw some additional selling pressure. That was the selling climax. We actually broke the lower end of a low minus trend line. That's usually where you were going to see a selling climax, and then whoosh, a lot of bears trapped. And yeah, so I took a lot of crap in here. Well, guess what? I was right. These year-end rallies happen when everything looks so dire, and it's the same way every year. So now you've got this strong market rally, and Sunday night, I had mentioned in my video, said, yeah, the news is fairly light this week, but we've got the CPI coming out. I believe that if anything, the CPI is going to come in light and we're going to generate a nice market rally off of it. Please go back, watch that video, verify what I'm telling you. Don't take what I tell you as gospel. Go back and verify. Yes, there was upside potential to the CPI. On the other hand, I did not feel that a hot CPI number was going to lead to a market decline. Why not? Because the market's numb to inflation. They've seen heavy, hot inflation numbers for a year and a half now. So they're like, yeah, Fed's close to ending its tightening cycle. That's really all we care about. And you've got this year-end strength coming in. So a bad number, a hot number, would not have sparked a big decline. Within reason, if it comes in at 7% annualized, yeah, okay, that's going to roil some investors, but it's not going to happen. There are no signs that that's going to happen. So PCE, all the other inflation indicators have been coming in mild. So we get this mild number and the market rallies huge yesterday. Now here's the difference between the gap and go yesterday. And my market comments before the open said, listen, we're going to get a gap and go higher. This is a very good setup for the market. We've got a breakout through this downward sloping trend line. This is a major trend line that dates back to July 27th. That is substantial. We're already above all the major moving averages. And so, yeah, we've got a big gap up right here. Let me put the major moving averages up. And there you can see, we broke out through the 100-day moving average last Friday, right in there. That was a big move. And we're above the 200-day, AVWAP-Q, downward sloping trend lines. Everything's great, but the really big tell was, what's the news? Okay, so here we didn't have material news on this big gap up. We didn't have big material news here. We might have had overseas markets that were up. We didn't have big news here. That's why most of these gaps up are reversed. But in this instance, we had big news. So why does this gap and go hold? And what are the clues? How can I devise this gap and go trading strategy? All right, now let's get into all of this, and I'm going to start with the S&P, and then we're going to drill down to a couple of stocks. So when you've got this move higher, you've got to make sure that you don't have a gap reversal, and you just don't know. As good as this news felt, you had to wait for the first few bars, and they weren't long green stack candles, but they were nice and consecutive. So already you see that, yes, this is a big gap up, but buyers are supporting this move. Well, who's buying this? What idiot is out there buying this late in the game? Well, the idiots are not idiots. These are large asset managers. and they are looking at a macro backdrop in the interest rate environment. So all of a sudden, the Fed funds futures that indicate the probability of a rate hike in December and January, they went to zero, meaning that the Fed is going to pause in December, they're going to pause in January. So that got factored in right away, and it had been at about 30% for a December rate hike. So that's a pretty substantial change. Asset managers are not looking at, oh, this is a gap up and I can't buy a gap up because blah, blah, blah. They're looking out a year and a half, and they're saying, hey, folks, we've been waiting for this news. This is material. We're going to start putting longer term money into the market. And so they start allocating into equities, and that's who's driving this price action. Big, big news. The backdrop, the macro backdrop, has been impacted by this news, and they're looking a year and a half out. So for the seasoned trader, they can come in and they can buy this. Buy it with confidence even, especially given the trend that we've seen over the course of the last 3 weeks. They are not going to be worried that, oh my God, the market rug is going to get pulled out from underneath me. And that's really what novices learn, and it's okay. If you're a novice and you don't like buying gaps up and you don't like trading gap and goes, awesome. That's where your mindset should be, because I've already shown you that most of these fail. And it takes material news for them not to fail. And when you get material news, that's when you get a monster gap up. Not a little one, a really big move up. So the seasoned trader identifies that this is a good buying opportunity, so they start getting long right in here. Now, what most novice traders will do, and the reason that they don't like buying gap and goes, is because they've had their head handed to them. So as Mark Twain once said, the cat that sits on a hot stove will never sit on a stove again, hot or cold, because they associate that with pain. But there's a lesson to be learned, and there are times when you can buy it. So as you become more seasoned, you'll be able to identify which gap and goes are legitimate, and then you'll be able to devise a gap and go strategy. So I'm going to be showing you that in just a second when it pertains to stocks. So if you're passive and you're saying, hey, I'm not going to chase this thing, I will have my opportunity. I just have to be patient. Again, the novice, and here they're like, patient, 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 patient. I'm so patient. I'm so proud of myself. Breakout to a new high. I've missed all this move. Oh my gosh. Bye, 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 bye. And then you get this long red candle that's almost an engulfing candle. Okay, that's a sign of resistance. This is where your pro is starting to take profits because they realize that from here to here is a massive gain. You're going to get a little bit of a dip in there somewhere. So they're out of the position. But the novice who ultimately gets to the point to where they feel that, no, I'm going to stay patient. I'm going to stay to the game plan. I'm not going to get FOMO. They wait for this pullback right here. They see support forming at the VWAP. This is where you would enter. You don't need to enter here. And the guy that buys here, he's shaking out here. Oh my God, I can't believe I did it again. I bought the high of the day. Market's falling apart. It looks like it's going to roll over. Oh, it just swept. So they bail on their longs, and some of them even short. Oh, they're going to be taught a very expensive lesson because this market's going higher. So we get a little bit of a lift off here. Would I have bought right here? Yeah, I definitely would have bought there. We had a nice bullish 1OP cross. I would have had my stop not too far below it because we want to make sure that that open for sure is preserved. We're just below the VWAP. We've got room to move down to that level. Wouldn't want to quite get there. How we would get there? Long red candle. Okay, yeah, I'm stopping out. Couple of smaller red candles. I wouldn't worry about it. Seeing some tails would be good because I'll talk about tails in a second here. So we get this little rally, but you don't know. You could lift right off on this type of news. So yeah, I would have been long in here. And now we retest it. That's okay. I'm still long basically at my entry point. And this is when you know that the rally is coming, is because they try and spank that thing down and buyers come in and say, yep, I'm going to buy here. They try and spank that thing down and buyers come in. That's what leaves the tails there, is they're trying to drive it down and the market bounces. So when you get above VWAP here, there were about 15 S&P points to be made right here. So if you were trading S&P, which I don't recommend you do, there are always better values in stock. We can see that the market has opened higher this morning. We had retail sales down 0.1%, pretty much in line with expectations. Not a great number. PPI came in soft, light. That's good. That's consistent with yesterday's CPI number. So we're getting a little bit of a gap up through yesterday's high right now. We'll be able to watch, see what the market's doing. Right now we've got OneOption in a bearish cycle. So it's completing the cycle from yesterday. This is where I would not be chasing this gap up. Let's see if we can come in and fill this gap in right here. Well, what does that do for me? If we get this pullback, it's going to provide me with a better entry point because the price is lower, but it's going to buy me time because I'm able to evaluate which stocks are pushing higher and which ones are retracing. Maybe they got a little overheated yesterday, but I'm not coming in and chasing stocks that are gapping higher. I'm being very patient, waiting to see what the market does in here. So with regards to the S&P, the seasoned novice who's starting to finally bridge over and says, I'm going to have my chance. I don't have to chase in here. I don't feel comfortable doing it. Okay, you wait. You see that nice support level around the VWAP? That's a good entry point. You're still going to make your 15%. So, gap and go trading strategy. Let's dial in to individual stocks. What do we want to see? What don't we want to see? Well, given that the market has run up so far, so fast on this gap and go, you don't want a stock that does the same thing and has a monster gap up and a monster long green candle. Why not, Pete? That seems like it would be bullish to me, and the volume was heavy. Because most of those gains have been realized. You're going to see at least the stock digest those gains and flatline. More than likely, you're going to see a gap reversal starting where it fills in some of those gains, and then maybe later in the day it starts to regain some of those losses. I mean, it's still going to be up for the day, but buying the open on something like that, no. So what do I want to see? Well, I'd like to see a stock that has been poking at a resistance level and that is starting to move higher. Maybe it gaps up a little bit, maybe a half of an ATR, 20-day ATR for the stock. Maybe you cover half of that distance. Maybe it's a full ATR on a massive gap like that. I'd be pretty hesitant on a full ATR, but that gives it room to tick, tick, tick higher all day long. And you get that 45-degree angle. That's the one that I want to get behind. So let's take a look at a couple of stocks yesterday, which I will also mention that recently I've been telling you about bullish put spreads. I'm going to be showing you bullish put spreads on some of these stocks. Why do I favor bullish put spreads in my videos? Because I only do a couple of them a week. I don't have a chance to follow up on these stocks or these trades, so I'm not able to micromanage it and go, take profits here, get in here, add here. This is a nice low maintenance strategy. I can follow up on them in future videos, but if you're more confident and you're more aggressive than I am because you like what you see in the market, you like what you see in the stock, then instead of doing out of the money bullish put spreads, you can certainly buy at the money call debit spreads. You can even buy in the money calls with a longer term expiration and a high delta. Perfectly fine. Your confidence in the market, your market opinion, your confidence in the stock, short term momentum in the stock dictate the optimal trading strategy. So the duration of the move, the magnitude of the move, the direction of the move, your confidence in the move all determine which option strategy is most favorable, the best one for you, and it also helps you with your position sizing. So enough said about option trading strategies. If you get the market right and you get the stock right, you've heard me say it 1,000 times, you can trade almost any option strategy under the sun and make money. The difference is what your level of confidence is in that underlying analysis and in the market. AVGO, love this horizontal breakout. I'm just going to go through green royal flush. We're going to take a look at some stocks that are nice. So when you're selling out of the money bullish put spread, you don't have to be right. You just can't be horribly wrong. So an example, and I don't know that there's any premium in this, although the stock is a $1,000 stock, you would sell your out of the money bullish put spread keying off of that 925 level. So you'd sell the 925 puts, you'd buy the 920s, do it for $1 credit, try and stay inside of 1 month. In the course of a month, if the stock preserves that 925 level, you are going to generate a 25% return based on the margin that you put up, based on the maximum risk of that position. So what can the stock do? The stock can stay here. The stock can move higher. The stock can pull back to 950. It can pull all the way back to this horizontal was resistance, is now support. It can pull back $50 and you're still going to collect that 25% on that bullish put spread. That's why I like the strategy so much. We just have to make sure that we have the right market backdrop. And I'm pretty confident that this is a strategy that we're going to be using for many years in the future. We just had this 2022-2023 Fed tightening cycle that we had to let get behind us before we could really lean into this strategy. But the market has a tendency to go up. Look at a 40-year chart of the S&P 500 and you'll see that. Well, if the market is flat to higher 80-90% of the time, well, this strategy works fabulously because we don't have to worry about the market rug getting pulled out from under us. We just need to find really solid stocks. Relative strength, relative weakness helps us do that. Plus, these technical breakouts. And then we lean on these technical breakouts because they become support level. Adobe, love the breakout. Costco, beautiful breakout. Lots of members in the chat room yesterday all over Costco. So this is the type of trade that you want to be looking for when you have a gap and go on the S&P 500. Massive gap up, limited upside. You don't want stocks that have that same quality. You want the grinder. Oh, nice little move higher in Costco. Tick, tick, tick. Yeah, I can get behind this one because the stock did not open up in here and then flatline the rest of the day. Instead, buyers were like, yeah, I want to support this stock. This is a nice one. It's breaking through D1 horizontal resistance, getting through this high plus trend line. Nice little gap up, not a massive gap from the high. You had roughly 580. Stock opens at 581.74 for a $500 stock. It opens $1.70 higher. No big deal. Tick, 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 tick higher all day long. That's a gap and go strategy that you can get behind. So you find these stocks that are breaking through major technical resistance levels, that have not made a huge move, certainly not more than one 20-day ATR, much less than that. They have the potential to rally all day long. You can get behind that move and you don't have to sweat it at all. So we're waiting patiently because the market gapped up. We don't like to chase the market. We don't like to trade gap and goes. This is not a big market rally, but you can see being patient is going to pay off. Look, our 1OP cycle is still bearish. As this gap fills, what am I going to do right now? I'm going to look for some stocks that are actually holding up pretty well. So we're going to be looking for those stocks that are moving higher. Hey, there's a nice big move in Costco. Am I going to chase it right here? No, not a chance. It's going to have to pull back. So how might I trade this? I like the market. Market have a little bit of a pullback in here. This stock is probably going to pull back. Look, it's strong relative to the market. Right click, create alert, set your rules. I want strong versus S&P 500. Well, it's already strong versus S&P 500. There you've got real relative strength. I'm going to click that. I'm going to go to an M5 basis, strong versus SPY, all good. Here's the beauty of what we've got in Option Stalker Pro. This has to go negative, and then it has to go positive. So it knows that it's already positive. It's waiting for it to go negative. When it goes positive, I'm going to get the alert, and then I can evaluate how deep this pullback was and if Costco is still attractive to me. Took me 2 seconds to set that alert. And so if the market continues to drift in, Costco continues to drift in, I want to see half of this gain preserved, because if I start seeing long red candle, long red candle, long red candle, gap filled, no bueno. I don't want to take a long position in Costco right now if I see that type of price action. If I see the S&P 500, long red candle, long red candle, long red candle, filling in the gap easily and getting downward momentum, perhaps some sell programs coming in, I don't want to be getting long. I want to let that selling pressure wane. I want to find that support level, let the market establish it. All that time, I'm looking for stocks with relative strength, relative strength, relative strength. Show me those stocks that are ticking higher when the market is down. Those are the ones I want. Ideally, they haven't made monster moves like that. PDD. Let's take a look at that. So these stocks are coming up on green royal flush right now, real time. Which, by the way, today, in the last hour of trading, I'm going to be doing my first live streaming event with Harry. He is a leader in our chat room. He's a phenomenal trader. We're excited about doing it, but there are a lot of moving parts, so we want to make sure that we've got the live stream components in place. Test it before we do a live stream on YouTube, but I'm planning to do one a week from today, and we'll determine whether or not we do it during market hours. I'm kind of leaning that way. So this is a good precursor to that because you can see my live market commentary right now. So look for that. I will post a link to that live event sometime Thursday or Friday once we're confident that we've got all the bugs worked out on the live stream. So I hope to see you then. Let's keep going through the analysis here. PDD, beautiful breakout on a D1 basis. These stocks are all bullish across multiple time frames. They have buy signals from our proprietary buy and sell signals. So yeah, I like that technical breakout right there. We could zoom out and see how long ago that is a significant technical breakout. That's nice. Go back into that 5-minute chart. And we could see that it is ticking higher right now. It has a pretty substantial gap. Yeah, I like that one. create that alert, go in. I can do an LRSI alert as well. So I can go into LRSI and I can be alerted when LRSI M5 is, and right now it's going to be greater than 80 given this rally up here. What I want to see is when LRSI is greater than 80, which means it's going to have to pull back and then rally again. So stock's going to have to pull back to get that LRSI below 20, and then when it gets back above 80, I'll get the alert and I'll be able to evaluate how much of these gains have been given back. If the stock holds this gap later in the day, yeah, I'm going to be very interested in getting long PDD. Disney, mentioned that in the chat room. I like Disney. I think this could be a longer term turning point for the stock. Look at that downward sloping trend line, breach to the upside above the 200-day moving average this morning. Very nice. It is a choppy stock. It tends to reverse. So this is a great one that I would use. Set that alert, go in, strong real relative strength, right in there. Strong versus SP5, PYM5, set that alert. So now it's got to go negative, then positive, and that's when I'm going to get my alert. Disney, yeah, I like Disney. Disney doesn't carry a lot of option premium. You see how easy this is? That's a beautiful breakout right there on Lulu. I like it. Nice breakout yesterday. It's not too far out of the gate today. It's starting to reverse a little bit. Market's still coming in. This is when you want to search. Find those stocks. BA, we'll stay in the daily chart right now. It's a lot easier for me to use Option Stalker real time because I would use a version that also has a 5-minute chart up, so it's easier for me to look at the daily chart and the 5-minute chart. But when I record on YouTube, the charts become so compressed that they're very difficult to see. ZS. I love this one. I mentioned this yesterday in the chat room. Why do I like it so much? So you can visually draw this upward sloping trend line here. You can visually draw this upward sloping trend line right here. This dates back to June of this year. So why do I like this stock so much? It's choppy. What the heck? What's going on with this thing? What did the market do? What did the market do in the last 3 months? Down, down, down hard. What did this stock do? Upward sloping trading channel. Huh. There are buyers out there. They like this stock. Now we get a breakout through this high plus trend line. I like that stock a lot. Let's see where that trend line came into play. That's a significant high plus trend line. Yeah, I like ZS. This stock's going to continue to move higher. It's choppy. It's chunky. You can see. Oh, I got to have it. I got to have it right here. Look, new high of the day. No, the stock pulls back all the time. You set your alert. Set your alert. Wait for the stock to regain some relative strength, and you'll be buying into these dips right here. This is a nice stock to trade. This is not a Momo day trading type stock. This is one that you could also consider for selling it out of the money bullish put spread below that $180 strike price. I like SHOP. I really like this one, and it carries high option implied volatilities, so you can distance yourself from the action. That is a beautiful trend line breakout right in there. So let's zoom back in, and you can see that selling an out of the money bullish put spread below the $60 strike price, say $60, 57.50 bullish put spread, do that for a 50-cent credit. There's your 25% return. Could easily be my pick of the day. Stock's going to have to pull in a bit for you to get that type of premium, but they're pretty, well, let's take a look and see where those premiums are. So we're going to go in and we're going to take a look at SHOP, and we're going to go to December 15th, and we're going to look at a 60 55 bullish put spread. So I need to get $1 for that because I've got $5 between the strike prices. So it's going to have to pull back a bit. Yesterday that spread might have been there. So if the market continues to pull in a little bit, I don't need to chase shop. I do like it. If you were more aggressive, would I day trade shop from the long side? Yeah, this is nice. So here's how we measure relative strength. Market gaps up, tick, 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 lower. Okay? Not a big sample size. What's a stock do? Tick, 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 higher on good volume. Yes, I like shop. Any kind of pullback, I want to see that VWAP preserved. Let the market come in. Please come in, market. Please give me a chance to see what shop does when the market sells off. Because if the market continues to drift down and the market continues to fill that gap and this stock holds the VWAP, can't get below VWAP, we like this stock. Buyers are in there. Nice breakout. Yes, as soon as the market finds support, which we know we want to be trading alongside, we know the market is strong, this stock wants to go. Market comes down, 1OP bearish cycle ends, we get a nice little bullish cross, we start seeing some tails under body for the S&P, we find support somewhere above the close yesterday. All systems go. What if the market falls apart? We see long red candle, and this was all fluff yesterday, this is all fake. Well, we're not going to see that, but what if? Well, if that happens, shop has already demonstrated that institutional buyers are in there. That's what the size represents. That's what the relative strength represents. 75% of all stocks follow the market. When the market is down, 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 and the stock is treading water or moving higher, it tells you that the long-term money that's looking a year, 2 years out, they don't care that the market is down during the last 20 minutes. They're looking at the stock longer term, and they are buyers. That's the tell. That's why this system works. So let's knock through a few more of these, and then we'll call it a day. Roku, boom, 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 looking good, getting some volume in here. Didn't have volume early, but its volume's starting to pick up a little bit. Let's see what that stock looks like. Beautiful little gap up here. It's got to get through this downward sloping trend line. Trend line tells us, nope, don't buy it here. You got to get through that, then it might be of interest to us. Qualcomm, nice little breakout there through these two trend lines. Yeah, that one could be pretty good. You can see a lot of chop in that stock, but it's starting to finally gain some traction here. Zoom out. There you can see the chop. I do not like trading choppy stocks like that because as soon as the move looks legitimate, gee, have I seen this type of move before in the stock? Yes, I have. Right in here. Blam. Well, that was actually after an earnings announcement. Plus, we had a weak market backdrop, so you also have to factor that in. When you're flipping charts and you get good at it, you've been doing it for 30 years, all of these things are in the back of your mind, so you're not even consciously thinking about them. You just know when you look at a chart what the market had been doing at that time. STNE, nice little breakout here, good follow through. I'm looking for something that I'm going to have as my pick of the day, but until I find something I really want to latch onto, I'm just doing some market analysis, showing you what I would be going through on a daily basis. Long green candle. We like these long green candles preserved in entirety. If we're going to retrace, we want the halfway point of it to retrace. We do not want to see all of it retraced. And the longer we stay at the high here, the more we need to see that follow through because ultimately we will start to retrace it. It's a sign that this is a one-off, that buyers could not hold those gains. And that's what we're seeing right now in Starbucks. Decent little gap up yesterday. Nothing outrageous. Prior day's high. We even check the prior day's high, so this is not a massive gap. It is based on the close, but overall, not a big gap. Okay, so we're not overly chasing. Now we start to see some nice price action yesterday with the market continuing to grind higher. Yeah, Starbucks is one that you could have gotten into. You wouldn't feel like you're overly chasing in here. Then that ticks higher and provides some really nice returns. Just clicking on Apple, holding the bid right in here. This is good. Didn't gap up a lot with the market. Put in a nice long green candle. You're patient. Tails. Trying to whap it down. Can't knock it down. Market finds support? Yeah. Apple's probably going to grind higher. Dash. Take a look at that D1. A little bit of a choppy stock in here. You get a big run up here, and you get this sell off right in here with a big rebound. This is a nice rebound. Yes, it's a nice breakout. I just know that this is a volatile stock, so I don't want to be chasing highs of the day. I want to be in there buying dips. Take a look at the volume. Volume is, not that great right now. Right now, I want to be focusing on stocks that have lots of volume. Well, here is a way to measure that. Within Option Stalker Pro, you can add any variable that you want to these columns. I happen to have mine set up with relative strength and our buy and sell signals. And then I'm also looking for stocks that are making a high of the day. Makes it very easy to find these, especially in the middle of the trading day. The blue dots show me that on a 15-minute, 1 hour, and daily basis that the stock has heavy volume relative to its 20-day moving average for that period. So I can go through any one of these searches and see, then my eyes are just instantly drawn to what's got a lot of green dots, what has a blue dot, what's on its high of the day, SQ. Nuts. I hope that's not going to be an issue for me because my session might have expired and I don't think that I logged off and back on, which is a practice that you should all be in. So SQ looks pretty good. And I'm not going to be able to finish my video. I'm so sorry about that because my session has ended and I don't want to go through and restart. So you can see Dash looks pretty good. It's starting to make a new high. God dang it. So I'm going to leave you with a long for the day. I'm going to leave you with a bullish put spread that I really like. Out of the stocks that I looked at, I really like SHOP, S-H-O-P. I think that's going to set up beautifully for a bullish put spread. One stock that I had noticed yesterday that I really like was TSM. I like that stock as well. So go into your daily chart. Take a look at TSM, draw your downward sloping trend lines on a D1 basis. You'll see that the stock has been able to move through those trend lines. Stock is also above all the major moving averages. I like those breakouts. I think the stock is going to continue to push higher. I'm going to make TSM, and I don't even know what it's doing this morning, my pick of the day. And you can see how we've got OneOption coming in. It should start to find support in here. It's an early indicator. It is a predictive indicator, so we don't need to jump the gun. We wait for the dotted line to flatten out. We wait for that nice bullish cross. And if we still continue to see compression in here on SPY with tails under body, tiny body little candles, this is what we call a wimpy retracement. Overlapping candles, very stubborn price action on the way down. This is a sign that buyers are still engaged. This is a sign that the market is going to find support fairly early this morning because we're not seeing long red candle, long red candle, long red candle. That's a sign that sellers are in control and that there's heavy selling pressure. That's not what we're seeing. This gap up is simply being challenged because that's what the programs do on any gap up. And that's why gap and go trading strategies you have to handle with care because most of them turn into gap reversals unless you have material news that impacts the market on a macro basis. So you get this little pullback, can't get this thing down, and the candles start to become very tiny and very compressed. That's when you know that your time is fairly limited, that you've got to have those strong stocks in your sights, because when this 1OP indicator flattens out, you've got a strong market tailwind on a longer term basis. You've got a wimpy little bid check early in the day. You're going to be all systems go probably within the next 15 to 20 minutes. We're a half an hour into trading right now, 35 minutes into trading. I think that within the next 10, 15 minutes, you're going to see the market find support, and you're going to find some of the stocks that I highlighted taking off, and they've been ticking, ticking, ticking higher during this bid check. And that's what tells you that buyers are in there, especially if the volume is heavy. And I really wish I could go take a look at TSM right now, because I would feel even better about it if it had some decent trading volume in it today. That's all I've got for you. Watch for the link to the streaming live event. I also hope that we can have a way for you to ask questions before the event. That way we can decide which ones we want to answer. I'm excited about it. I think it's going to be really good. In particular, if we can do it during market hours, we'll be able to do similar analysis for you. Thanks so much for watching. Please leave your comments. My gosh, that's what motivates me to keep doing these videos. Then I know that you're engaged. I know that content is good, and I can answer any questions that you might have. Trade well. We will see you Sunday evening for sure.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.